Hey guys, welcome back to the channel, and this is the Mighty Indexers, and in today's video we are analyzing the Walt Disney Company, ticker symbol DIS. And unfortunately, I hate to say it, but this is a very interesting company because when you go on any of these financial YouTube channels, including just YouTube in general, and you just type in Disney stock, you will come up with so many videos telling you about, why you should be buying it, why it's a great investment. But in today's video, I'm going to be explaining to you folks why this company has been a complete letdown and a waste of time as an investment. So, this is an educational video. I hope people take something good out of it. So the Walt Disney Company is down over the last 5 years, down 42%. This is a company that, they're very heavily reliant on streaming. They're trying to get recurring revenue. They make a lot of money. So when we head here to financials, you can see they are making a lot of revenue. It's growing, as well as their net income that is growing pretty rapidly, and their earnings per share is increasing. Now, you might think this is going to translate into a booming stock price, but unfortunately, what we have with the Walt Disney Company is 10 years, as you can see here on Seeking Alpha, the 10-year chart, 10 years of almost no returns. Now, a normal person would look at this chart and be like, you know what? This is very interesting. They had that COVID low. They went all the way up in 2021 to almost $200 a share. They went heavily on streaming, and that's the way the whole industry shifted, guys, right? It all went streaming. So they're pushing their streaming services. They made some acquisitions. But if you had told a Disney investor back in 2021 that their shares would be worth almost half as much value 5 years later, I think they would have laughed at you. Looking at the dividends history, so they did cut the dividend during COVID. For a good portion of time, there was no dividend. So 10 years, 10 years of making almost no money. So from August 2016 to August 2026, they have made almost no money. And when you go here to August of 2016, okay, there we go, to today, the S&P 500 is up 254%. 254%, just sticking with a simple S&P 500 index fund. So when you watch these YouTube videos and people are telling you to buy individual companies, and it looks great, looks fun, but it did not outperform the S&P the last 10 years. And it did not outperform the S&P the last 30 years. Look at this. From January, let's put it right here. This is a little bit more accurate. So from January of 1996 to today, let's see if we can get that chart to act right. There we go. Okay, January 1996 to today, we're looking at 30 years has gone by. The S&P 500 is up a whopping almost 1,200%. When you look at the Walt Disney Company, you would be very disappointed. You look at right there. Yep, 1996. This is 30 years of time, guys. You can't get that back. It's made about a third. So a third of the return in the same amount of time. And in the last decade, you have made almost nothing with this company. So that is why we make these videos. We educate people on indexing to financial wealth. And if you know anybody who buys individual companies or watches all these YouTube videos, send them some of mine. Eventually we'll come across whatever company they're holding, and obviously some companies might outperform some of these index funds, but that's how it works, right? You're going to have some that outperform, some that underperform, and over time the index will probably beat most of them. And the index always changes, so you don't know what the index will look like in 5, 10, 15, 20 years from now. It could look completely different. Anyways, folks, hope you enjoyed the video, and see you in the next one.